Today's episode is sponsored by Trading 212, the platform bringing commission-free investing to everyone. Welcome to Many Happy Returns, where we aim to make you a better investor. I'm Roman.
And I'm Michael.
The ban is over. From 8th of October 2025, UK retail investors can buy exchange-traded crypto products, potentially in an ISA or a SIPP. So why has the FCA made a U-turn?
We look at the risks involved and whether crypto ETNs deserve a place in your portfolio. And in today's dumb question of the week, does scarcity make something valuable? All right, let's get into it. So, Roman, it's finally happened. Something you've been calling for a long time. It happened in the US at the start of 2024. It's been in place in Europe for a while, but now finally, the Financial Conduct Authority in the UK says, you know what? We trust you enough, British public, to own some crypto.
Yeah, it's finally happened, and it's a relief, I think, because previously you had to go via one of these awful exchanges which were regularly hacked and where there were lots of scams. And then there was the big question of how do you store cryptocurrency? Do you store it on a cold wallet? Because that represents a technological hurdle for a lot of older people, such as myself, because you have to think about how do I transfer it from the exchange when I buy some onto my cold wallet? How do I get it off the cold wallet back onto the exchange? Does that happen safely? How easy is it? Where do I store the cold wallet so that if the house burns down, I don't lose the money? All of these concerns go out of the window, and suddenly it becomes an investment that you can have alongside your other stuff.
Now, I'm conscious that we might be speaking to two different audiences today. Probably quite a lot of our listeners own crypto and are au fait with all the terms, and then some people might be a lot less familiar with it. So you said cold wallet a lot. What do you mean by cold wallet, and why is it a scary thing?
Well, the proof of ownership for cryptocurrency is whether you hold something called the key. Now, that is just a number, but that's your proof of ownership. Now, that key can be held in various places. If you buy on an exchange, a cryptocurrency exchange, well, the link between the key and you is held on the exchange. And if the exchange gets hacked and the money gets stolen, then really you've got no recourse. So what a lot of people do is they download that key, that number, onto a physical storage device, and that's called a cold wallet. And that means you own the key physically. So even if the exchange gets hacked, you don't care. Now you've got ownership of it. But the physical ownership of the thing is your responsibility. If you lose it, you lose the money. It's like having gold bars around the house, but just more esoteric, I think, and easier to lose than a gold bar.
Is this what happened to this guy I keep reading about who wants to dig up a dump in, I think it's Wales, isn't it? He's like, oh my goodness, I threw out a hard drive in 2014 or something. Let me excavate the council landfill.
Yeah, that's right. The guy lost his Bitcoin, and he thinks it's currently worth about almost $600 million. As of prices on February the 25th. So if you are going to dig up treasure, that would definitely be worth finding.
So what you're saying, though, is that the FCA has come to its senses and now is taking the investment out of the landfill, metaphorically speaking, and letting us trade crypto, sort of, on regulated exchanges.
That's the idea. And it's a long time coming because previously there was all this difficulty with these exchanges being essentially the Wild West. You had to just trust the exchange.
And exchanges have gone bankrupt.
Yeah, they've gone bankrupt, they've been hacked, and they weren't regulated. Now everyone says, oh, regulation's boring. Who wants regulations? I hate rules. But the fact is the rules are there to protect you. And if something bad does happen, you want recourse.
So let's just step back a moment and remind ourselves of the context here. So the FCA actually published some research at the end of last year, which showed that 12% of UK adults, that's around 7 million people, owned cryptocurrencies. And that had been on a steady rise over the past few years. I think it was something like 4% 5 years ago, so it's up to 12% now. And presumably these people were owning it directly, buying on exchanges and holding it themselves. The average amount of crypto held by someone in the UK was just under £2,000, 1,842 according to the FCA. But around a third of people incorrectly said that they believed they could raise a complaint with the Financial Conduct Authority if something went wrong and they could seek some kind of recourse, which obviously was not true. This was an unregulated asset and still is.
And in some ways will remain unregulated. So the measures that the FCA is introducing don't give you the full protections you'd have with, say, an equity ETF. But it is a step forward, I think. The fact that it's exchange traded and it's going to be at least protected in that sense. So the liquidity will be there and the storage safety will be there because you'll be able to store it alongside your other investments on a UK regulated platform.
That's where we're headed. Romin, shall I walk you through the history of crypto regulation in the UK? Would that be helpful for you?
Oh, definitely. I've got no idea.
So, let's go back to the 6th of January 2021. That was the date when the FCA formally banned the sale of crypto ETNs, ETFs, and derivatives to retail investors in the UK. And they said this was in light of the risks posed by these products at that time. It also cited extreme volatility in the crypto market and a lack of public understanding in these products. At the time, Bitcoin was trading around $29,000. As we're recording this, it's more like $115,000. So that 4-year ban has cost UK investors quite a lot, if you wanted to put it in those terms.
Yeah, I was at a party a couple of weeks ago and there was a guy there who invested in crypto and he was spitting blood about this. He was saying, it's so backward in the UK. Other countries have changed the regulations in the US, for example, and we're really trailing the rest of the world. And he really saw this as some kind of technological backwardness for the UK.
But then the FCA maybe slowly started to see the error of its ways. So in March 2024, they announced they would not object to requests from recognised investment exchanges, such as the London Stock Exchange, to create UK-listed crypto exchange-traded notes. But these were only for institutional investors. So it sort of loosened the rules a little bit, but it wasn't for you and me.
Yeah, maybe if you're a high net worth client, maybe they could have done it as well if you had almost professional levels of competence.
So you did see these ETNs, as they're called, start to be listed in the UK, but we couldn't buy them. At the time, the FCA said it continued to believe that crypto ETNs and crypto derivatives are ill-suited for retail consumers due to the harm they pose. It added that they're high-risk investments, largely unregulated, and people who invest should be prepared to lose all their money.
And they're still saying that about being willing to lose all of your money.
Yes, they are. That's their go-to line. Be prepared to lose everything. Which brings us to this year, when at the start of the summer in June, the FCA launched a consultation. We've always got to have a consultation before doing anything. Well, they launched one to say, should we lift the ban on crypto ETNs for retail investors? And the answer was yes.
And of course, that comes with caveats because this is the FCA after all. So the first of those caveats is about where these things can be traded. Now, in the UK, we've got things called recognised investment exchanges. And that was based on the FSMA Act in 2000. And the idea here is that the FCA recognises certain exchanges. Primarily, we're talking about the London Stock Exchange, but they also talk about recognised overseas investment exchanges. So that might be NYSE, the New York Stock Exchange. It might be SIBO Europe Limited. There are lots of exchanges out there which are domiciled abroad. Now, as I understand it, this new legislation only allows crypto ETNs to be traded on the UK recognised investment exchanges.
I think that's right. It's all a little bit ambiguous, but when you read it, it says that they're concerned that overseas exchanges won't have the same regulatory protections as in the UK around our listing regime and prospectus regulation. And I think it's partly due to the fact that the FCA is dipping its toe in the water. It's not going as far as the US have or Europe has, where you're able to buy quite complicated crypto products with derivatives involved, and that's still not going to be allowed in the UK. They don't want leverage in these products.
Yeah, so crypto asset derivatives are still banned. That's not going to be available to retail investors. And I think that's probably a good thing.
The other thing that's still banned are crypto ETFs. Now, this might be confusing to people because we've talked about ETNs so far, exchange traded notes, but they are slightly different from the ETFs you might be used to.
They're very different. So just to be clear, one letter can make a huge difference. Let's say that you invest in an exchange-traded fund for equities. You hand over £100, say, and then the fund manager goes out and buys £100 worth of stock if it's physically replicated, then that stuff sits in a kind of bankruptcy remote entity. It is investment in a company which owns the stuff. You have legal recourse to own the stuff inside the fund. So even if the fund manager goes bust, you still own the stuff, the fund will get liquidated and you get your money back. So that's an ETF. If you have an ETN, it's completely different because firstly, what it is, it's a bond issued by the asset manager. So strictly speaking, these things are unsecured, unsubordinated debt securities. What does that mean? Well, it means that you're now exposed to the credit quality of the issuing asset manager. So if the asset manager starts to look a bit shaky in terms of its credit quality, you'll notice that the value of these ETNs falls, even though the value of the assets themselves, which are linked to the value of the ETN, haven't changed.
Okay, let me sort of try and cut through all of that, because it all sounds right, but also a bit confusing, even for me. As I understand it then, with an ETF, you kind of indirectly own a basket of assets. It's not that hard to understand. But an ETN is basically an IOU from a bank.
And the IOU says in the description, I'll pay you a principal value which is linked to the value of this asset. In this case, it would be a cryptocurrency like Bitcoin. Well, the asset manager then goes out and buys some Bitcoin, say, and that way they can make good on their promise on their bonds.
Yeah, they could do that. But as I understand it, that's typically not how it works. You don't get an investment bank going out and directly buying Bitcoin. If it's fully backed, they might go and have a custodian separate to them, which will own some Bitcoin on their behalf. But you can also get ETNs that are not fully backed. And there they might hedge in another way through derivatives or whatever. But I believe in the UK and Europe, crypto ETNs tend to be fully backed. That's not to say there isn't counterparty risk.
There's a big counterparty risk. And in this case, the counterparty whose credit risk you're taking is the issuer. Now, with an ETF, you never have to think about that because the value of the fund is directly driven by the value of the assets in the fund. With an ETN, the relationship is only via a piece of paper, which is the prospectus, where the issuer says, I promise that I'll pay you a principal amount when you sell this thing, which is proportional in some way to the value of this underlying asset, Bitcoin.
It's kind of funny, isn't it? Because people have wanted to buy crypto in their ISA, say, and it wasn't allowed. So they would do it via proxy. Maybe they'd own MicroStrategy or one of these stocks that's pretty correlated to the value of Bitcoin. Maybe it's Coinbase, something like that. Now we're saying, okay, we're opening up crypto for ISAs or whatever, but are we? Or are we just going to another proxy?
Yeah, and this is not good, I don't think, because who can assess the credit quality of one of these companies, one of these asset managers? Unless you've got access to bond rating agencies, maybe they'd have a rating for the company if it's issued debt. That might be able to help you, but will these issuers be AAA quality? I doubt it in many cases. So I don't think you can assess that risk as a retail investor. So that begs the question, why did the FCA go down this route of creating ETNs instead of ETFs, where you wouldn't have to worry about the credit quality of the issuer?
Well, I can tell you, Roman, because I looked at the FCA handbook and the updates to it. And it says, and I quote, ETFs marketed to UK retail investors are unable to invest directly into crypto assets under our current regulatory framework for funds. This framework would need to be updated before retail investors could access crypto asset ETFs. So it seems like a kind of procedural, bureaucratic thing.
Certainly, if you've got a UCITS fund, it can't have access to cryptocurrencies. So maybe this is due to the linkage we've still got with regulations in Europe. That's just my guess.
Yeah, and I think it'll evolve over time. Going back to that point you said about assessing the credit quality of ETN issuers, there are currently 17 crypto ETNs listed on the London Stock Exchange. As we said, up to now, only available for institutional investors. But they have been issued by, prominent asset managers such as Fidelity, WisdomTree, Invesco, GlobalX, as well as some of the more crypto specialist firms like Bitwise, CoinShares, 21 Shares. So there's a wide variety to choose from. And if you're thinking, which one should I choose? I do want to buy a crypto ETN. Then what's it going to come down to? Is it assessing these asset managers, or is it the more traditional things we're used to, like fees and liquidity?
I think it's both. And I think the credit side of it, working out the credit quality of the asset manager, is going to be really tough. And I think the FCA, if they're going to go down this route, should make some information available about that credit quality. Because if they don't, then UK retail investors are just shooting in the dark. You've got no idea. So I think unless you can have a handle on that risk, going down this ETN route is going to be problematic.
Yeah, because you've got to be an expert in so many things to get it right. Like, you might be an expert in crypto, as much as anyone is, but now you've got to be an expert in reading investment bank balance sheets to decide which of these ETNs am I going to buy.
Remember, a lot of these companies are not investment banks. They're specialist asset managers. Sometimes investment banks will do this too. You know, if there's a buck to be made, you can bet investment banks are going to be there. But a lot of these are quite small boutique firms, so maybe even privately held, in which case you're not going to be able to get your hands on a balance sheet.
And even if you could, and even if you understood it, maybe that's not even enough, because they might not be custodying their own Bitcoin, and you've got to understand the trustworthiness of who they've parked the Bitcoin with. With a huge company, maybe it wouldn't send them under anyway if they lost all their Bitcoin, so they'll still be able to pay you back. But with a smaller player, maybe not.
So I think there's a whole bunch of issues here which make it difficult for a retail investor, unnecessarily difficult. You know, if they'd just gone down the physically backed route, it would have been a lot simpler. But under their own rules, they couldn't. So that's kind of a weird situation, which probably makes it more difficult for the UK retail investors. I think this is a step forward, don't get me wrong, but it's still got problems.
Well, hang on, hold your horses. I dug into some more niche documentation and pulled up the London Stock Exchange Crypto ETN Admission Fact Sheet. And they have some pretty tight rules. So this is kind of a self-regulation almost, because they're afraid of their reputation being hurt if these products go wrong. So, and it says, the exchange will only consider applications for crypto ETNs where the proposed ETN is physically backed, i.e. non-leveraged, has a market price or other value measure of the underlying that is reliable and publicly available, and is tracking Bitcoin or Ethereum. So at least the London Stock Exchange is saying, you've got to hold the assets, and those assets must be Bitcoin or Ethereum.
Well, personally, I find that quite reassuring. You know, I think those are reasonable rules.
They've gone further. The next bullet point says, the underlying crypto assets must be wholly or principally held in cold storage. I can sense you're getting happy here, Roman. Or subject to arrangements that achieve an equivalent outcome to cold storage. Now I'm sensing you're less happy. There's your loophole. There's also language about the issuer being audited and the custodians being subject to anti-money laundering regulations, all that kind of boilerplate stuff you might imagine. But it's not opening up to the full Wild West, I think is my point. At least not on the London Stock Exchange.
Well, all of that's music to my ears, you know, the fact that they can't have some dodgy derivatives inside the product and that they're not going to give you exposure to other cryptocurrencies. Plus, this really weird point, which is working out the actual value of the fund, because there are multiple exchanges across the world for Bitcoin. And the question is, which price do you choose? Because it will be slightly different from exchange to exchange. You get the same problem with gold. You've got different exchanges across the world. It's traded in London, it's traded in New York. So you've got to be absolutely clear about which closing price you're going to use to value the asset.
But I guess these rules could change, so we might need to stay on top of them. Now, to just wrap up all the caveats here, a big one is that these crypto ETNs will not benefit from FSCS protection. That's the Financial Services Compensation Scheme.
But bear in mind that if you have an exchange-traded fund domiciled in Ireland or Luxembourg, chances are you won't have FSCS protection there either.
Yes, but there are some equivalent schemes in Ireland and Luxembourg. Not identical, but similar.
Yeah, so you do have some protection. But in this case, it sounds like you're not going to have any protection.
Yeah, and we should be clear. You never have protection if the value of your investment falls. That's the risk you're taking. What we're talking about here is protecting against things like fraud or them just losing all the Bitcoin, right? Or never having had it in the first place. That's still your risk.
And for someone like me, who's a finfluencer by accident, I have to say, well, the financial promotions rules are going to be in place as well for these assets. So if you're going to be marketing this stuff, it has to have certain risk warnings.
Yeah, and they're quite clear that these crypto ETNs will have the same marketing restrictions and risk warning requirements as the underlying asset.
So I get the feeling that the FCA was under pressure from the government to do something to regulate crypto, and they've cobbled something together as best they can, to be fair, and they've come up with something which is reasonable, I think. Today's episode is sponsored by Trading 212, the platform bringing commission-free investing to everyone. Trading 212 Stocks and Shares ISA is the cheapest way to invest, with zero commission and the lowest FX fees I could find on the market. Looking to keep things simple, you can easily automate your investing with pies that allow you to rebalance your portfolio at the click of a button. Customers with Invest accounts can also benefit from the Trading 212 card, which has no FX fees, true interbank rates, and offers 1.5% cash back on all transactions up to £15 per month. Many Happy Returns listeners can claim free fractional shares worth up to £100. Just create and verify a Trading 212 Invest or Stocks ISA account, make a minimum deposit of £1, and use the promo code RAMIN, RAMIN, within 10 days of signing up, or use the link in the show notes. When investing, your capital is at risk and you may get back less than invested. Past performance doesn't guarantee future results. Pies and Autoinvest is an execution-only service, not investment advice or portfolio management. Automatic investing refers to executing scheduled deposits. You are responsible for all investment and rebalancing decisions. Free shares can be fractional. 212 cards are issued by Paynetics, which provide all payment services. Trading 212 provides customer support and user interface. Terms and fees apply.
Okay, I just want to pick up on that point you made before the break, Romin, about I think there was pressure on the FCA to become a little bit more crypto friendly because they've been very wary of it over the last 5 years, hence the ban on listed products. But what's changed? Crypto's the same crypto, right? Why now?
Well, what they said in their press release was that they think that there's a better understanding of the products. I'm not sure about that. I don't think anyone really understands what the hell these things are. They also cite market maturity. It's just been around for longer. It's got more institutional acceptance. I think what's implicitly said here is that US regulators have approved these products, exchange-traded ETFs.
I think that's right. I think it's hard to be a major financial center and be an outlier on something as mainstream now as crypto. But remember that regulators in the US went through their own journey where they were kind of forced by the courts almost implicitly to allow crypto ETFs. And now the administration in America is very friendly towards crypto. You would say, I mean, Trump's issuing his own meme coins, right? As is Melania. And I think significantly, they've passed several crypto bills through Congress, as well as some executive orders, which really open up the marketplace in the US and potentially allow cryptocurrency to be held in 401ks, which is kind of like their SIPPs.
That's right. And I wonder whether this is also going to be allowed into ISAs and SIPPs. And I couldn't find any information about that from the FCA, which is quite odd. I assume it will be allowed, but I haven't seen a confirmation of that.
I don't see why it wouldn't be allowed. It's on regulated exchanges. ETNs are generally allowed in ISAs and SIPPs. And they haven't mentioned that this is a special case in that regard. So I think it's allowed. But I guess it'll be up to the discretion of your investment platform. They can always stop you buying something. They don't have to offer every product.
And some platforms probably won't have it because they have a restricted set of funds.
It'll be interesting to see what the take-up is from UK retail investors. As we said, we know around 12% of the population owns cryptocurrency already, but that will be in taxable form. They'll have to declare their capital gains when they sell it. You will do that, won't you, everybody? But if you put it in an ISA or a SIPP, you don't have to worry about capital gains. And certainly when other markets have liberalized the rules, you have seen massive inflows into listed crypto products. So I think in the US now, crypto ETFs have something like $180 billion in assets under management. Partly that's because of the inflows, and partly that's because the price of Bitcoin's gone up a lot over the last year.
And just as an example of that, if we look at the US, when IBIT was launched, it became the fastest ETF to grow to $50 billion in assets under management. And it was also the fastest to reach 10 billion. So I think the war will be on. I mean, the starting pistol is going to be fired on October the 8th, and I expect there'll be very brisk uptake of these products.
I expect we'll see many more launched. And presumably that will drive down fees, you'd have thought. I mean, ultimately, why would these products be expensive? They just got to buy some Bitcoin and hold it safely.
Well, these new things, you can usually charge more initially. And then I think the competition will drive down the prices. And whichever fund has the lowest fee will probably be the one that performs the best. Because like you say, it's just Bitcoin. Why pay more for a fund if it's giving you the same exposure? Now, another thing to consider is that if you own Bitcoin, you can lend it out and you can earn a yield doing that. So the question is whether that will be allowed under the new rules from the FCA. If it is, then you could also have a yield-generating investment. And that might be a discriminator between different funds. If certain ones give you that yield, that lending out yield, and others don't, well, clearly you prefer the ones that do. But it just depends on the regulation. I don't know if that'll be allowed.
My guess is not, from reading through those London Stock Exchange documents, but who knows, right? It's all a bit up in the air. I'd also be slightly wary of that. I mean, I understand how it all works in terms of equity ETFs, where lending out's not a big problem. But as you said at the start, with crypto, it's more like not your keys, not your crypto. So if you start lending everything out, I get even more worried about where these assets are. I mean, I guess this question really gets to the heart of what we're doing here in terms of regulation. How far do we want to go? The FCA is now taking the kind of first step a little bit later than other jurisdictions. Do you think they've got the balance right between risk and reward and choice for UK investors?
I think the question is whether other coins will be allowed. Initially, it's going to be Bitcoin and Ether, and certainly people who are into crypto probably want other coins to be available, but that's not going to happen under the first round. I think the ETN thing's a mistake. I'm not happy with that, but it's better than what went before, so I'll take it. But I think it's interesting looking at the responses to the consultation. So the FCA got 80 responses to that consultation. And this was from firms, trade associations, consumer groups, and also individual investors and consumers. And 75 firms across the traditional financial space and crypto assets sectors. Now, 95% of stakeholders supported lifting the ban on crypto ETNs.
I guess there aren't many people who feel so strongly about not lifting the ban that they would even write into the consultation, right?
It is self-selecting, yeah. And 2/3 of the respondents supported allowing crypto asset ETFs, which I think is a fair point.
There was also a smaller subsection of people who wanted to lift the ban on crypto derivatives. So this is where you might be able to get like 5 times levered Bitcoin or whatever. Or like more complicated products which do interesting things with crypto, I guess.
Yeah, structured products on crypto or even these yield-generating investments. So retirees could generate very high returns, but take the downside risk with something like a covered call.
Yep, that's what we want in our pensions, Romin. But there was a quote in the FT in an article that looked at this lifting of the ban. And it was from the director of digital assets research at WisdomTree. They said, the end of the UK retail ban marks a pivotal moment in the broader integration of digital assets into the financial system. And someone else said it's equivalent to the Big Bang of finance in the 80s. You wouldn't be here today, Roman, without that Big Bang.
Yeah, maybe. I think markets would have been fine without it.
But maybe London wouldn't have been what it was. This is my point from earlier. Maybe the FCA has just been forced into it by the fact that you can't get too out of line with what's going on in New York and Frankfurt and wherever.
And the market in UK equities kind of seems to be dying a slow death. So maybe they're thinking we'll get ahead of the next wave.
The FCA have launched a crypto roadmap, which shows where they want to go next with regulation. I looked at the roadmap and it's just a long list of consultations. So who knows what's actually going to come out of it. But it's looking at stuff like admissions rules, disclosures rules, stable coins, custody rules, prudential regulations, all the stuff that seems really dry. But the things you tweak there can have big impacts on what's allowed and the risks to the wider financial system, I guess.
Yeah, stablecoin in particular could potentially be a kind of conduction mechanism for a crisis in crypto to work its way into more traditional financial products.
There's a quote here from David Giel, who's the Executive Director of Payments and Digital Finance at the FCA. He says, "Crypto is a growing industry, currently largely unregulated. We want to create a crypto regime that gives firms the clarity they need to safely innovate while delivering appropriate levels of market integrity and consumer protection. Our aim is to drive sustainable, long-term growth of crypto in the UK. We're asking whether we've got the balance right."
So look, the government's got this bit between its teeth to get growth going in the UK. The current government and the previous government and any competent government would want to stimulate UK growth. And one of the industries we're really good at is finance. Now, that was partly scuppered when we had Brexit because suddenly we're no longer the gateway to Europe. We're just a separate economy in the neighbourhood of Europe with different rules and regulations. Whereas maybe this way, we've got a gateway to the entire world via the UK market in crypto.
Blockchain on Thames, I guess. But will you be buying, Romin? It seems like in October you'll be able to, if you want to.
Yeah, well, currently I have crypto, a small amount in my fund portfolio, and I do that just to keep track of it. And by having skin in the game, I have to be aware of it. So my plan is to sell my holding on the cryptocurrency exchange and move the money onto one of these ETNs held in one of my regular brokerage accounts.
Within a SIPP or an ISA, I presume, if you can.
Obviously, yeah. If it was in an ISA, I'd be willing to do it. Otherwise, maybe not, because I don't want to complicate my tax position.
But it'll stay a small percentage of your holding, right? Like, I don't know why this move towards ETNs, it might be convenient, but why would that change anyone's opinion on the validity of crypto as an investment or the sizing of trades, right? Why would it suddenly become a bigger part of your portfolio? Unless you're just too lazy or incompetent to do it before.
Yeah, I agree. I don't think it makes any difference to the size of my holding. You know, I'd hold the same amount, but just in a different form, and also within a tax wrapper.
And maybe the other point everyone should remember is that crypto is still high risk. Like, it's very, very volatile. Even Bitcoin, right, which is maybe the least volatile of the cryptocurrencies, is extremely volatile, way more than stocks or bonds. And you must see crypto ETNs as high risk. Just because it's listed on an exchange doesn't mean it's somehow less risky as an asset class, I think.
And that's my worry, I think. The fact that this has now been almost rubber stamped by the FCA makes people think, oh, it must be a safe investment. It is not a safe investment.
Yes.
It's extremely risky and very crashy. So if you're scared of buying stocks, you should be twice as scared of buying cryptocurrency.
Yeah, and I have to say, like, despite the number going up a lot, and I do like numbers going up a lot, right? I'm a rational investor like everybody else. I'm still quite skeptical of crypto, but it seems to have got over that hurdle of regulatory adoption now, that it's hard to see it completely going away, right? It's part of life going forwards, I think. But even if you're going to hold some, you do need rebalancing discipline if you're running a portfolio in the way we might typically think of it, where you're carefully calibrating your asset allocation. Because crypto is so volatile, it could grow to an outsized position or shrink to an undersized position very rapidly.
Yeah, I think that discipline's a really important point, because if it is a huge rally, you'll be thinking, oh, I've got all of this Bitcoin and this is going to grow further, so I'm not going to sell any. But of course, if you do that, then the amount of risk you hold is increasing over time. So I agree completely. You should be really disciplined about the exposure that you have, both on the upside and the downside.
Yeah.
And we should be absolutely clear also that this is not a recommendation about buying any of these products, whether it's in raw Bitcoin form or whether it's wrapped up as an ETN.
And the key with any investment is to make sure you understand it before you buy it. Like, read the prospectus, read the KID, the key investor information document, and make sure you do understand what it is. Because remember, the FSCS is not going to bail you out here if something goes wrong.
Yeah, as always, caveat emptor. Now, one of the benefits of the PensionCraft community is our chat application, and we do have a channel dedicated to cryptocurrency discussions. So if you want to hold those conversations with us and to learn more about the investment itself, then you can learn more by going to pensioncraft.com/membership.
Okay, today's dumb question of the week. Does scarcity make something valuable?
And I think the answer is a resounding no. There are lots of things out there which are scarce but not valuable. And of course, this is one of the arguments as to why cryptocurrency is valuable.
I always think with scarcity, you have to be very careful defining your terms, right? Because is cryptocurrency scarce? No, there are lots and lots of different cryptocurrencies. Is Bitcoin scarce? Yes, there's only going to be 21 million Bitcoin ever made. Lots of them have already been lost. But that doesn't in itself make it valuable. You still need demand.
And that's a critical point. Things which are rare only become valuable if people believe in it. It's almost like the story of Tinkerbell. In order to keep Tinkerbell alive, you've got to clap your hands and believe in fairies. Well, at the moment, everybody, including the US president, believes in fairies. But will people always believe in fairies? I think that's more likely to be self-sustaining because so many people's livelihoods now depend on the existence of crypto fairies. But what is the fundamental value of cryptocurrency? And I think the truth is there's none.
Well, I probably would have said that a few years ago. But do you not think there's value in the network effect? Like, what's the value of Facebook? I mean, it's just a bit of computer software. Well, the value is a lot of people use Facebook. And so it's very hard to outcompete it. Has Bitcoin got that sort of first mover advantage where it's built up a network effect?
I think in places like the UK, where we've got very rapid electronic payment systems, I don't think you can make the case that we need something like Bitcoin or stablecoin to transfer money. That's just not true. So my question would be, what function does it serve other than speculation? Sure, the number's going up, but what value does it give to society?
Yeah, but aren't there other assets like a diamond sparkling on a finger? Like, what's the value of that really? It looks nice. Gold, right? It's been around for a long time. It's scarce and it's fungible and it has lots of things which make it good as a form of money and a store of value. But ultimately, its industrial uses are quite limited. Its value, at least, is not coming from the fact it's a good conductor, right?
I agree, and I think that's the key point, which is that for assets which don't generate an income, like gold, like diamonds, then the value is ultimately driven by demand. And as long as the demand's there, the value will be there. But it's always the case that with something like Bitcoin, if something else comes along which gets more attention, that is the Bitcoin killer. If there is something which looks more attractive, then it'll drain money out of that market. Now, what drives most people to buy Bitcoin? Some of them believe in the philosophy, the libertarian philosophy that goes with it. Other people, most people I'd say, are just drawn by the return. If I put 1,000 in today, it's going to be worth much more in the future. However, I think the rate at which it's grown will not be replicated in the future. If it was, then it's going to start dwarfing the rest of the investable market, and it's going to start starving things like stocks, bonds of capital. So that's going to be a big problem, I think. If the returns aren't there, I think the demand will start to wane.
But it has come through some Bitcoin winters in the past, right? It's had, massive 90% drawdowns and then bounced back.
Over its how many years lifetime?
Yeah, like 15 years or whatever. It's hard to draw many conclusions from that short period, I agree. And to be clear, I'm mostly playing devil's advocate here. What's interesting, I find, with Bitcoin is that the scarcity is artificial. It's coded into the protocol itself. And that idea of artificial scarcity is present across a lot of assets, I would say. Not gold. Gold is scarce because there's only so much we can find in the ground and dig out. But diamonds, I would argue, are artificially scarce. Famously, the De Beers company ran a near cartel through most of the 20th century where they controlled the supply of diamonds. And they ran a successful marketing campaign in the 40s around a diamond is forever. And they actually turned the idea of diamonds as an engagement ring into a social norm. That wasn't a thing throughout human history. So they pumped up the demand and kept the supply constrained. Now, we've got lab-grown diamonds coming in. De Beers is in a lot of trouble. There are other things as well. Like if you think about copyright and the value of like music royalties or patents, that's artificial scarcity. And Napster very nearly crushed that model. So often these things that we think are scarce are not so scarce. And I saw the other day, and I think I sent you the article, Romin. It was something about how gold might become a byproduct of, was it nuclear fusion? I didn't understand all the details, but like it could end the scarcity of gold if we crack nuclear fusion. Was that right? Or have I misremembered that?
Yeah, that's right. There's some company in the United States which has realized that one of the byproducts of these blankets that go around these fusion reactors, if you bombard a certain isotope of mercury with neutrons out of these reactors, it turns into gold. So for every terawatt of energy that you generate a certain surprisingly large amount of gold. So it is radioactive, you have to say.
Yeah, but it'll decay over time. What they said is it might pay for the reactor. Like the sort of securitize these future gold revenues.
It's clever. It's clever. And I think that's another problem, which is that with gold, you get a new supply. You get an asteroid which has got lots of gold in it, or, you can suddenly manufacture it. But don't get the wrong idea about this episode. I'm not a crypto believer. I do not believe this is an asset that has fundamental value. Obviously, I own some because I have to learn about it because my clients think about it. But do I think it's a Ponzi scheme? Yes, I do.
Well, I guess it is in the sense that it's not generating cash flows and it relies on selling the investment to another investor. But it is scarce. Like with Bitcoin, as I understand it, there is no possibility of the supply growing beyond the hard cap. The question is just about demand.
So I'm quite happy for other people to believe and to clap their hands and for cryptocurrency to carry on going up in value.
I think even the FCA now is doing a slow clap. Thank you for joining us for Many Happy Returns. Keep sending us your questions, no matter how dumb, at mhr@pensioncraft.com.
And do remember to check out pensioncraft.com for all the information about our membership, courses, and investment coaching options.
Many Happy Returns is a PensionCraft production, co-hosted and executive produced by Romin Nakiza and Michael Pugh. This podcast is for informational and entertainment purposes and is not financial advice. We do not provide recommendations or endorse any decision to buy, sell, or hold any security. We cannot be held responsible for any actions listeners may take, and investors are encouraged to seek independent financial advice.